We're back at Clearwater Beach, Florida with the nation's largest home flippers. You've got to be doing at least 50 deals per year or more to be in this group. And we've brought the podcast studio on site to give you a glimpse at what is possible with real estate investing. And today we're talking with Hunter Jarvis, and it answers the question, will wholesaling be around? Well, every time there's somebody in need, but the thing that screws wholesaling up sometimes is when the buyer demand is not as frothy. And Hunter tells us exactly what to do to deal with that scenario, to continue wholesaling through a tough year like 2024 has been, and what we're looking forward to in 2025. So I co-host the podcast with Ryan Haywood, who's a CG Select member. And he's doing about 70 deals a year, so he could be in this group if he wanted to. He actually came to Austin because it was too cold in Missouri. And so I booked a podcast studio, and I looked up Chip Ferguson. He's like a CG Premier member, and we did him in person, and it was just so great. So that motivated me to figure out how to do more podcasts in person.
Everything in person is better, is my opinion.
It really is.
Yes.
Yeah. We almost had somebody cry yesterday. And that wasn't the intent, but it was like, man, that would have never happened on a virtual on a webinar thing. Exactly.
Yeah, I mean, I'm in an office in Richardson, and we have 10 employees that come in every single day, and we just work so much better together when we can just get up and go talk to somebody instead of having to call or text or Zoom, and it's better for culture and just work efficiency too.
Yeah. So do they all come in the office every day?
Every day. We've got a 9 a.m. huddle. We start our day off. Everybody reports their numbers. Everybody's got a scorecard. So we're tracking everything daily, weekly, monthly, quarterly, annually. And so we just have a let's get together and set the day kind of mindset meeting every day at 9. And every day has got a theme, right? So like Monday will be Motivation Monday. I'll do it or I'll ask somebody to bring some motivation to the team. It'll be a quote, a movie clip, a YouTube video, whatever. Tuesday will be a live call Tuesday. So we'll all get together and we'll pull a call out of our CRM that either went really well or somebody will volunteer and be like, hey, I had a call yesterday that I think I might have missed something. Let's listen to it together and see if we can break this down. Wednesday is Gratitude Wednesday. It just kind of gets a positive mindset, right? So positivity leads to production, and so we just all go around the table and say something we're grateful for. And that also builds like just relationships, because it's usually not work related, so it's like something personal. So we're learning something personal about everybody every single week, and you do that for multiple years, and we all know each other really well at this point.
Yeah.
Thursday is Role Play Thursday, so we'll role play different scenarios. We'll pull scenarios out of a jar, and somebody's got to read it and say, seller wants to sell their house but can't meet us in person. What do we do? And we all kind of go, we'll go around and say what we do there. And then we have Case Study Friday, where we look at a deal in our CRM from the moment it hit our CRM and all the actions that were required by all the different team members to bring that to a closed deal. And it really solidifies our training.
So you'll review that on Friday?
Every Friday.
Yeah.
Pull a deal out. And it really solidifies the training because everybody can see not only what other people are doing to make deals happen, but like your specific role within the broader context of what we're doing as a company.
That's awesome. I love how you do different days. When we had COVID, we couldn't come to the office. I implemented this new thing called the Fun Friday meeting. And everybody was supposed to share something they were excited about or something that was a win from the past week, business or personal related. They might have got a new couch, something like that. And now we added in some training because I felt like that was lacking in our routine. We still do it at the Fun Friday meeting. And it's an app called Kahoot. It was built by a student, and it became a really awesome training tool. And the way it works is there's 3 questions that I'll propose that are multiple choice at the beginning, and they get to answer them with their phone. And whoever answers it correctly and quickest gets points, right? So I'll say like, hey, if somebody's irate in the customer support, what is the best thing to do? And there'll be 4 answers.
Oh, nice.
And so then they get all the scores, and then I get 2 minutes or whatever to talk about like why that's important. And so it's like one way we've incorporated training lately, and I'd love to incorporate it in more ways because it can be very boring. But you've really done a good job of breaking it up, I think, into bite-sized chunks and making it routine.
I think you got to gamify stuff. You know, when it's mundane and it's the same training that we all know it, but we all also know that if you stop training, it's like stopping going to the gym. You're going to get out of shape quickly. So I think it's good to gamify it like that and to be in person to do it, because it just kind of, it just solidifies it a little bit better and people have fun with it actually.
So I know you have 10 people, you said,
Yep.
and you've got 350 doors ish, and you also do wholesales as well, right?
Yes.
About 35 a year, is that correct?
So you might have seen kind of like an old rap sheet. So that was probably when I started CG back in 2021. I was in the select group, and so it was just me and my brother. I had left my full-time job in 2020. At the end of 2020, we were kind of ramping this thing up. And since then, we've gone from about 35 deals a year to this year we'll close somewhere between 150 and 200.
What? That's crazy.
Yeah, so those stats you were seeing are a little older. You'll see, I'm going to present today downstairs. But yeah, things have gone well for us. I would say on our deal flow of the 150, I'd say revenue-wise, we're about a 50-50 split. Transaction-wise, we're probably more like 70% wholesale, 30% flip. Flips, we've just found, really, obviously, you're going to make more money, right? So we're spreading, we're spreading the same number of leads, but getting more revenue from those. So we've leaned into that a little bit in the past year and a half. On the multifamily side, I actually I'd mentioned I had left my job in 2020. What I was doing was I was director of acquisitions for a private equity group, and we were just buying multifamily assets all over the state of Texas. So I was kind of leading the Dallas office. We were buying in Austin and Dallas and Houston, kind of the major metros. And so I learned how to underwrite deals, source deals, network with brokers, how to raise capital for deals. And actually, when I first started flipping houses, I was a lot more comfortable buying an apartment complex than I was flipping a house.
Yeah.
So I knew how to do that one. I didn't know how to flip a house. So yeah, I bought apartments long before I bought houses, and then this side hustle of wholesaling kind of snowballed into what it is now, and allowed me to kind of transition away from the PE group and do my own thing.
Got it. So when you when you were with the PE group, obviously, like that was more of a job, right?
Yeah. Yep.
Okay.
W-2 job.
And so all the multifamily you've done has been with the PE group, not yourself?
Nope, that was on the side. So with the group that I was with.
Fundraised for yourself?
Yeah,
Yeah,
and it's a different fundraise. So with the private equity groups, we're going out to institutional investors writing one check, right? And these are larger transactions that we're looking for things that actually move the needle. So anywhere from $30 to $100 million deals, and we're getting those checks from one check writers. When I'm looking for assets, it was more of bite-sized stuff that I could handle myself, right? And I'm raising money through a syndication style, which means you take an opportunity and you market that opportunity to high net worth individuals, and everybody's writing you individual checks. Mm-hmm. So if you're raising $10 million, you might have 35 high net worth investors in that deal. So multiple check writers, a little bit of a different scenario, not really what we were going for with the private equity group. So there was really no conflict of interest. I was able to just leverage my broker relationships and say, hey, you guys know me from years of buying apartments. If you ever come across something that looks like this, that's not in the box of who I work for, I'd love to look at it, because I think I can take that down.
That's really cool. Why did you decide to move into single families more heavily than multifamily?
Simply for capital creation. I had none of my own funds. I was working a W-2 job, making okay money, but I really wanted to be able to invest my own funds alongside. I'm raising money from people that are writing me $500,000 checks, $1 million checks sometimes, and I want to be able to answer the question, how much are you putting in? And I want it to be a substantial number. So I've tried to find ways to generate substantial, income to be able to invest, and so that's what led me down that path. And then that income became a lot more substantial over time, and I was able to then invest into these apartments, and then also kind of build the company into what it is. Yeah,
that's why I got into single family too. But I've always wondered if I've been missing out, having never done any commercial, any multifamily, anything like that.
Yeah, I gave a presentation a few years ago about the virtues of multifamily, and I think it's a great investment vehicle, but I think that there are some cons as well to it that have kind of led me to not second guess, but like just maybe approach it differently. There was a point in time where I thought I wanted to build a multifamily company where we just invested in we had thousands of doors. And I think what I have found is there are things that are out of your control with multifamily that I don't necessarily enjoy. So with multifamily, you're kind of up against a time clock. So your leverage is generally 5 to 10 years on the loan, and the value of your asset is heavily dependent on interest rates, right? So I was fortunate enough to lock in all of my interest rates, so I have nothing that's floating.
Oh, I didn't know you could do that.
Oh yeah. So
I thought they were all balloon after 5 years.
The ones that are in trouble right now are.
Yeah.
But what I would do is I would take lower leverage, right? So reduce the debt amount and then fix the interest rate for 10 years, 7 to 10 years. And I just happened to do that because of a bad experience I had early on with a bridge loan. It had nothing to do with the interest rate. It just had everything to do with the way the lender treated me during the transaction. And so I just went Fannie Mae, Freddie Mac after that, fixed everything. So none of my assets are in trouble, but the valuations are really down right now because of where interest rates are. Mm-hmm. And that's totally out of my control. And I don't necessarily enjoy not being able to control the outcome. I've done all these things to push income and reduce expenses and grow NOI. And then at the end of the day, my investment is almost flat because of where interest rates have trended over the years. And of course, it's cyclical. It'll come back, and all I got to do is wait because my interest rates are fixed. But because of that, I'm looking at potentially other asset classes just because I don't necessarily enjoy kind of having my hands tied in a situation like that where I can't drive the kind of performance that I can in other areas.
Yeah. One of the things you said was in the last year and a half, you kind of switched more into flips. You've been more leaning into flips. You've been 30% flips, but the revenue is 50% because you make more from each one of those.
Right.
Has that been to combat the interest rates in single family? Because somebody else just said they made that transition too out in Atlanta yesterday.
Yeah, no, it really has nothing to do with interest rates. In fact, it's harder to flip now than it was before we started just because mortgage rates are higher. Buyer demand is not as frothy. So the reason we did that is because we had the capability to. So I hired a person who all she does is she's our director of design and construction. So when we decide we're going to flip a house, it goes to her, and she's very good at this. She was doing this for a hedge fund before we pulled her over. And she designs them. She runs the project, all of it. And so what we were doing was we were underwriting these properties. We'd say, all right, we can wholesale this property for $25,000, or we can buy it, redo the carpet, paint, fix the bathrooms and countertops, cabinets, and we might make 65, 70 on it. So why don't we do that, right? And so we're now doing that on a whole lot more of these opportunities that we're getting because, the wholesale opportunity is fine, but I think the way to grow your business and to grow your company is just to lean into what your capabilities are. And if you have the capability to do it, let's make more money later than less money now.
Makes sense. Yeah, it was actually Clint Cooper, and he said that the buyer demand was less, so he was making his flips nicer.
Yes.
So that he would just be the one people would want to buy. Since there's less demand,
That's
he just
right.
wanted to create more demand. So it sounds similar.
Yeah, and similar to Clint, we're both direct to seller, right? So we've got the ability to source these opportunities at extreme discounts, so we can afford to make our properties nicer. We can afford to stage them when we're done with it, to hide blemishes, and then we can also afford to like price them at or below where the comps are selling. So we can get our inventory moving very quickly and still make the kind of spreads that we need to make, just because of how skilled we've become. I don't know a lot about Clint's operation, but I know it's substantial. We've become very good at just getting below market opportunities in the house, and then being able to kind of sell them on the back end, have a better looking property for the same price.
Yeah. Let's switch gears to leadership. You've been in business for 4 years. It's going on 5, based on what you said, starting in 2020.
Yep.
So around that time, and it's really impressive what you've accomplished in just 4 years. It's pretty hard for me to imagine. Around that time, I kind of got some negative feedback, but I didn't really get it until I asked for it.
Yeah.
And a couple people told me that they had joined the team maybe in the last 2 years, and they said, "David, you make me feel stupid when I share an idea, and you just in front of everyone say, 'Oh, that won't work,' and we move quickly to the next part of the conversation." That was pretty tough for me to hear, but what I kind of realized was I already tried what they did, but they don't know that.
Yeah.
And so it kind of switched up what I was saying to say, "Hey, Hannah, that's like actually a really good idea. So I'll support you in doing that because I hired you to do this job and make those type of decisions. But there's one thing I thought you'd want to know is before you joined, I did try this, and this was the outcomes. Now, it might be different, but, et cetera."
Yeah.
So that was just something I had to learn, and I feel like I've gotten better at that. Is there anything you feel like has really was like a uh-oh moment for you, like when you were growing?
Yeah, definitely. And to touch on what you just said, I've found that if you explain the why behind what the reason why you're saying something to somebody or an action you're going to take, it kind of eliminates the "you make me feel stupid" thing, right? You're just explaining to them why that may or may not work out. You might decide to let them try it anyways, but I think that clearly defining the why has been helpful. When I found out that I was actually a really bad leader was back in 2020. I made my very first hire. I was doing everything myself. Brought in an acquisition manager, and I had I basically just said, hey, here's a login to your CRM. Start making calls. I had no trainings, had no onboarding materials, nothing. And then I went up to Salt Lake City to a mentor of mine's office, Mark Stubler. He runs a company called Utah Sell now. Yeah, and Cody Hoffine, right?
Yeah.
So I spent 3 days with them in their office, and I got to see what real leadership is like. And these guys, they're investing in their employees. They've got systems and processes and scorecards and daily huddles. And so it really opened my mind to what it really was to, or really what was essential to grow a company. And then ever since then, I started really investing in leadership through mentorship, through trainings, through books, through independent research, and then putting it all into practice, and then slowly becoming a better leader. And I was blessed with great team members who allowed me to make mistakes over time too, because the thing about being a leader is you're kind of putting everybody else under the microscope, but nobody's got you under a microscope generally in your organization. So they need to have grace with you when you're making mistakes in the same way that you have with them when they make mistakes.
Did that person stick around who you gave the CRM access?
He did not.
Yeah.
No surprise, right? He did okay for a little while, and then I brought in another acquisition manager who did better right off the bat, and I think he was just kind of done with it. I think he just kind of got burnt out on it, and no fault of his. I mean, I wouldn't have been there either. I was running it like a hobby instead of a business. And so the other thing about leadership too is I'm looking for people who I can just lead in a kind of broader sense. I don't want anybody that have to micromanage, so if you're finding yourself having to micromanage people, then you might not have the right team on board. And so when you really have those A players, you find that it's actually a lot easier to be a leader because you're not having to get in the weeds on things and kind of micromanage. You can just spend your time on strategic objectives and then growing the business and then supporting people and removing obstacles for them to do their job better. Not so much, hey, you were supposed to do this on your job and you didn't. It's how can I remove a problem for you now?
Right. Yeah, I actually call that read the play. I want somebody who has the ability to read the play and figure things out on their own.
Yeah.
And it's not an excuse for me not to have trained them or not to have given them the steps that they need to do, but there will be times where they won't have all the steps. And I want to know how they behave in that scenario. So one of the ways I've started to figure that out over the years was depending on how high level the job is, let's say it's a customer service role. One of the first things that I'll have them do before we get on an interview is send me a 2-minute video explaining their name and something about the city they live in and like why my company was kind of interesting to them in 2 minutes. And so a lot of people just won't do it, which is fine because they probably just mass applied, so it weeds them out.
Right.
And then some people will fret and ask, well, how do I send this to you? But it's amazing that 10% of the people will just get it done and send it to you. They'll send it in different ways. It'll be a Dropbox link. It'll be a YouTube link, whatever. It doesn't matter.
Right.
But I just kind of intentionally leave it vague to see who naturally just sends it, that's the person I really want to talk to and get on an interview with.
Yeah, I like that trick because then it just, like you said, it weeds out the people who aren't going to be a fit anyways, who either aren't going to do it or are going to ask you 100 questions on how to do something instead of just figure it out. I like that.
Yeah, and it's actually, it seems like, well, I'm being super picky, but that type of person who doesn't have the read the play ability, they won't like working at my company either. Right. So they may quit, later on because they won't feel as supported. Right. So that's a good trick, and it's awesome to hear you say that too. It gives me confidence I'm picking people the right way.
Yeah, absolutely. I think the hiring process is something that I've rushed into in the past without like putting up the proper kind of channels, and that's exactly what happens is you get somebody in the house that's not good for you, it's not good for them. Would have been totally better for both parties for us to just realize that up front. And I like what you've set up because that kind of eliminates a lot of that issue.
I'll do test projects as long as possible, even for a month if possible. I just was talking with somebody who wanted to be my video editor. and he edited a video. I recorded it, he edited it, he posted it, it went viral. It got 1.4 million views.
Wow.
So every signal was like, hire this person. He was ready to jump ship. But something told me, let's keep working together. There's literally nothing to lose if I just keep paying you on a contract basis for like a few more weeks.
Right.
And actually by the end of the weeks, he's like, man, I don't know if I want to continue doing this. My feedback was too direct for him. And he didn't like that. He took it, he was more like sensitive to that, took it more personally. And so maybe that's something that I should work on too, but also I like to give direct feedback, you know, so it was a good test for him, and he was glad he didn't take the job back when we first talked about it either.
That's good. And there's people out there that do direct, like they like direct feedback, or they don't get offended, you know, so you'll be able to find people that fit you.
Yep. So it seems like 10 people and 100 deals a year is like a very efficient, cost-effective team. What was the first person that you hired?
My first hire was an acquisition manager, which was hard because that's what I feel that I was skilled at, is being able to get out and negotiate deals and buy properties for very little. But what I found was it was really hard to build a company when I was in my car all day long, bouncing around to appointments. And so that's the first thing that I hired out, so that I could then spend more time, you know, in an office at my desk, kind of building the company out.
How many deals had you done at that point?
That's the funny thing about it, is I was kind of on that couple, you know, 2 deal a month pace.
That's a good pace.
Yeah. You know, for a solo guy, I think that's pretty good. But my goal was get to 4 deals, and I was like, man, when I get to 4 deals a month, I'm going to hire myself an acquisition manager. I'm going to start hiring help. But what helped me was when I went to Salt Lake City, I mentioned this to Mark Stugler, and he was like, you're never going to get to 4 deals a month because you're not hiring the help. So I needed to hire somebody else to grow, and that really opened my eyes when I did that, because not only did we get to 4, we got to 6, to 15, to 20, and it was all because I allowed other, you know, you have to be able to delegate and kind of move the needle that way instead of do everything yourself. And so, you know, I just was never going to get there doing it all myself.
Got it. Did that first acquisitions manager perform and work out how you thought it would?
So that's the guy I brought in with, you know,
CRM
I
guy?
had no training, no CRM. So he did okay. He did well enough to stick around until the next guy came in and was just naturally just better at the position, and I had become a little bit better of a leader at that time. So I think he felt a little bit just kind of over it. But the second acquisition manager that came on he's been with me for 3.5 years. He's now my sales manager. He's also my little brother. So
cool.
He does well.
It sounds like cold calling is a big part of your outreach and marketing, based on what you had the acquisition manager doing.
So we have cold callers that we outsource to a third party. So leads come in from them, and then we also have 2 lead managers now who are really calling those cold calls. The thing about cold call is the time when a deal hits to, you know, when we contract it, on average is more like 3 to 6 months.
Oh, so really? On the calls?
When we get a cold call lead, from our vendor, because we're outbound, right? So we're calling people saying, hey, are you interested in selling? And they're like, I mean, maybe in, you know, a little while. But we also do PPC and direct mail, and those are a lot shorter cycle, right? Because they're calling you, so they're generally ready to go. And so cold call is a great channel because it's low cost and it's high ROI. But it just takes really efficient lead management to manage. And then we also have direct mail and PPC, which is a lot more kind of now ready to go leads.
Do you feel like one works better than the other right now?
Direct mail's been great this year. Direct mail's been really good. That'll probably be a channel we lean into. PPC's gotten a lot more competitive and expensive. We still do well on it. The return is our lowest among our marketing channels, but the thing about PPC that I think is there's some hidden benefit there outside of just your typical return on ad spend, is the visibility, right? So for all of our other marketing pieces, when people get a piece of direct mail from us and they want to research us and they type in our thing and we're at the top of the search results every time, I think that helps solidify somebody with our postcard and then 12 others. And then when you get on our website, and we've got 200 Google reviews, and we look like a legitimate company. And so I think PPC adds a lot more than just what you're getting back monetarily. So I'd say all of them kind of work together. No lead source works all the time, but they all work all the time.
What's something that your business has allowed you to do that you weren't doing when you had a W-2 job?
It has allowed me to earn more income, but also it has allowed me to have a direct impact on other people when all of my team members I have a monthly one-on-one with, and everybody's got their own personal goals and then work goals. And so we've clearly worked towards those together, and it's been fun to see other people, or now people have been with me for 3 years, and I've got a woman in my office who's been with me for 3.5 years now, and she's making two and a half times what she was making when she came to work with me, and I was just hoping I could match her pay when she first started with me. And so she's kind of really grown into a very professional, savvy businesswoman now. And so things like that have been a lot of fun, where I really didn't have that opportunity in a W-2 job at all. I wasn't really so much managing people on a daily basis.
Got it. One of the things that I had like a mental block about when I first started was it came from where I previously worked. The boss was like, he acted poor. He drove like a really beat up car, and so I thought I needed to do that too. But on my fourth hire, it was a lease on our. She was like gonna take charge of our customer success, and she was like, "Man, I almost didn't take that job because your car looked so beat up. It didn't seem like your company was doing well."
And you're like,
and so I was like, "Man, that's funny. I was doing that on purpose, but it was the opposite way, So that's something."
So what do you drive now?
So have you allowed yourself to like kind of not necessarily be flashy, but just kind of enjoy some of the income you've been able to earn?
Yeah, absolutely. I mean, I've got a wife and 3 kids, and so that's where a lot of my income goes is paying the bills and taking care of them. But yeah, we go on family trips. We go to sports games and concerts, and anything we need, we have. I wouldn't say we're excessive. I have a little bit of a problem that my wife wishes I didn't, but when we're making financial decisions, like we just put new furniture in my house, and she's like, I want to buy this $5,000 couch. I'm like, that's not a $5,000 couch, that's a $200,000 couch, because that $5,000 would have been invested and compounded over 15, 20 years. So
she doesn't like that?
Well, she does. She understands it, but she's like, yeah, but we need the couch, and I have to kind of meet her in the middle, and and kind of understand that you can't put everything through a financial lens. You should enjoy your life and have nice things. You work really hard for it, right? So, but yeah, we do well, and we have everything we need.
That's awesome, and glad you guys are going to sports games and taking trips with your family, and that's hard to make time for. I feel like some people are focused so much on the money. And I mean, that's very much, I've been focused on my business for quite a few years, but seems like you have a good balance.
Yeah, I think balance is the key word there. And then I also kind of operate under the, not the assumption, but it's Eric Brewer calls it productive paranoia. This could all be over at any time. I mean, you're doing well right now, but things happen and things change, and you might not be doing well forever. So let's do everything we can now to make sure that we're protected in the future, and then let's take some chips off the table occasionally and save for our future. Yeah. Because there may be a day where things aren't as good as they are right now.
Is saving cash in your bank account, or is it like buying rentals, or what is that for you? Buying Bitcoin?
I keep not Bitcoin. Just because I haven't done the deep dive on Bitcoin to understand it. But for me, I keep enough cash in my operating account to cover 6 to 8 months of operating expenses for the business. Anything in excess of that is either invested in properties or the stock market. Mm-hmm. My dad's a very successful financial advisor, and so he's kind of he's got me in a lot of stocks that have done well, and then obviously the apartments. And as those start to sell off, I'll have new funds to kind of figure out how to allocate that. But for now, that's where I'm at, is either cash, properties, or stocks.
Got it. Well, this is a good time to wrap up. Is there you have social media where people could follow you?
I do. We've got
maybe send you some deals in the Dallas area.
Yeah. You can hit me up on Facebook. I'd say that's kind of what I'm on the most, just mainly for work stuff. I'm in all these great forums, so hit me up on Facebook, Hunter Jarvis. Email hunter@legacyhomebuyers.com. And other than that, man, that's it.
Sounds good.
Thanks for listening to the DealMachine Real Estate Investing Podcast. Please leave us a review and follow along wherever you're listening to your podcast.